Good morning, traders. Happy Wednesday out there to everyone. The old hump day, right? I hope everyone had a good evening there in store. For the most part, seeing the markets kept themselves behaved in the Globex session for the most part. A couple things that had some movement, but overall, keeping things pretty well in check. And before diving into the charts here, this AM board fairly light. As would be typical, we have the crude figure there for Wednesday, 10:30 Eastern. So we'll take that into account for the crude. 10-year auction for the notes, which could be interesting there. That's at 1 o'clock, of course. And then lastly, we have the meeting minutes at 2 p.m. FOMC meeting minutes, which we'll see. Usually is not a huge mover and shaker, but you never know with these things. So we'll take that into account, see what they bring to the table. And then tomorrow we do have unemployment claims, but overall, as we know, this week's been very light on the data. So, as mentioned yesterday, any type of movement that we'd have coming from the index futures and such would be kind of moving on their own accord, which would be certainly noteworthy to take into account. But with that, we're going to jump right on in here. We got our daily charts to take into account. And again, not really too much shifting as of the Globex session, right? We're kind of hanging out near the previous day's high. And we did, again, some work around the 5 SMA. We, had our closing beneath it and all. 2 days back, yesterday we kept ourselves beneath it as well, which we can as well see on the oscillator itself. Right. Okay, stretch this over. Right, versus our positive readings that we had built out. Right, so we're still kind of having some play around it. It's very mild, not like super enthusiastic here. The way that we're trading around it, like the market's not really zipping away and like getting a major close back above. They're kind of being very timid around it. 62.85 and change is where it comes into sight today. Which, quite frankly, the previous day's high is 62.89, so it's fairly kind of close to each other inside the zone, but daily charts really don't shift too much. I mean, here we are just having made all-time highs, so we're just it's a very mild pullback. Nothing that's like super alarming or anything. If we were to start to put in lower high structure along the way, that could be of a little bit more significance, but that certainly hasn't quite unfolded as of yet. So the daily charts, there's not so much to elaborate on. It's kind of been the same structure more or less from what we've left with it yesterday. The intraday charts are where we get a lot more value, right? The same hourly chart we've been looking at from yesterday and the day prior. I still think this is the primary time frame or technical that we have at work, right? It's still the same construct. And we can review this just for good measures, refresh ourselves here. The impulse down, the counter-reactive lift, and the partial retest down. Okay? The bear flag that's only gotten a partial retest. So the U-turn zone, okay, coming in at 62.91. Right? We came close yesterday, and we've come close in the overnight session, but still not quite enough to push on the other side. The blue dashed line, of course, is to represent the 5 SMA. Right, since we had that first closing below the 5 SMA, gets flagged as the 5 SMA buy, right? So as we come back up above, right, we kind of want to watch, see how we close relative to it. So that's where the blue dash line comes into sight. But on the other side, we have that 62.91, which is going to be a little bit more of a reference zone for us, right? We have the overnight high and everything from yesterday, that 89. Between 89 and 91. It's not a very large zone, but those are going to be our kind of parameters as we come back above. Or if you like to have it more condensed, nothing wrong with that either. You can look at it on a 120-minute basis. Impulse down, counter-reactive lift, partial retest, or failure test, and then a point of interest up above for ourselves. So I think that's a pretty decent feel as far as what we're working with on the ES, the E-mini. We'll see as to how we handle ourselves. In the pre-market, not looking too likely. We'll have a big gap. We could have a small one if we open above the previous day's high, but even if so, wouldn't be a very large gap. Wouldn't be very difficult for us to fill it. But for now, we wouldn't even have a gap to concern ourselves with. So, essentially holding their own, not too much changing. We can adjust the NASDAQ future as well because we have the similar, closing below 5 SMA for the NASDAQ, or we can use the, NDX as a proxy as well, right? We tested below, closed above, we formed a breakout mode, and didn't really get major expansion yesterday. So just for a quick little visit over to the NASDAQ future, I do want to just point out that our structure on either the hourlies or the 120-minute charts are going to be very similar, right? Impulse down, counter-reactive lift, partial retests, no full retest, and then a point of interest up above. I'll mark it with a nice green line here. Let's be closer to this tail. Would be if we started to come in and take out the other side, call it 22,975 roundabouts. In the case of the NASDAQ would be the equivalent point of what we have in the E-minis. But as you can see, the structure is a tad more tightly wound in the case of the NASDAQ than what we have with those E-minis. But just for a courtesy checkup, we do want to take that into consideration where we're landing with the NASDAQ. And then bringing ourselves over to the old euro currency. It's funny, these other groups actually are more clean than the index features, which is not necessarily always the case. Why it's more clean or more readable? Again, just highlighting a lot of the stuff has been the theme we've been kind of walking forward with it each day. Well, here's our lower highs and the lower lows, right? Yesterday was kind of a big one for the euro currency. We had a real great play coming in and taking out that previous day's low yesterday. Right? We came down, we did that all in the day session, right? We came in and looked below that 117,410, checked it off, right? Had the counter reactive lift, we came right back in the range, but on the same token, we still managed to put in a additional lower high. Came back down overnight, and we put in yet another lower low. Alright, so we're kind of still going through this motion. We put it in the testing phase. Alright, so now where we stand currently coming into today in the Globex session, right, we came down, we tested near, has not quite exceeded the prior day's low, and we have room to roam, right? We can push all the way back up in the EC if we'd like. And anywhere up in here, we have some low developed structure right on the other side of the shelf here. Looking at the other side of 117,840. Right, if they want to try and heal first, it's perfectly fine. We've, you know, been keeping it pretty well under pressure. I'll put a dash line here. But what I want to point out is even if we were to heal and push up in towards the zone, anywhere in here, right, if we keep ourselves below this previous reaction high of 118, 195, that still keeps us with the downtrend of lower highs and lower lows, right? So anywhere up in the zone, that's if we even manage to heal, right? We can very well just come in and breach the prior day's low as well, since that 20 period EMA on the daily chart is looming down there. But since they have been under pressure, just kind of keeping it open mind if they do want to have any type of lift underneath them, which as for now, not real superstar status, but if they have any lift, 117,840 is going to be one hurdle for them, and then it would be eyeing if we do take out 117,840 if we still put in a lower high. Again, this is going to be very similar to the bond chart. It's going to be similar to the gold. Right? These groups, when they have lower highs and lower lows, it makes it very difficult to sustain any real large upside moves. So that's what the blue circles are there to highlight for us in the euro currency. Or we could look at the dollar index as well. Either or will serve perfectly fine for our purposes. But felt pretty strong about the euro currency yesterday, and now coming into today, we've already come down, tested, held, so we have a little bit more of an open door. We're going to do more two-way trading there in the euro currency today, but if we do start to accelerate and try and make any type of upside progress, do bear in mind that we still have that structural component on the 120-minute chart to consider. And then bringing ourselves over to the BTC, the Bitcoin. What has been interesting with Bitcoin is over the past couple of trading days, we've been making slightly lower highs. Not bad or anything, just a very mild observation. A lot of bar overlap, but slightly lower highs. So today in the overnight session, we've managed to make one higher test. So changing things slightly. And now we've been able to look above the prior day's high, which for the Bitcoin, we're looking at 109,685 for the BTC. really constructive overall. Again, we are pretty much range bound on the daily chart, so it's not anything that's immediately changing the tone in a large way. We're still filling out the volume node, but since they're taking out the previous day's high, we do want to keep an eye, right? If that's going to be any type of early indication for a little change in character for the Bitcoin, because we have all the work from what we put in last week that looms up above, right? Well, even from this week into last week. A couple initial points here. If we come in here and adjust a couple things on the daily chart, we can clean up some of our zones. But start to look and see, okay, we have the high test from 2 days back, 110, 620, or sorry, 110, 265, 110, 525, and then 111, 220. All these previous lower highs that we've been building out will be kind of hurdles along the way for the Bitcoin. But at the moment, I would say the 120-minute chart looks pretty constructive to me. You could say we're kind of coming out of this very mild coil. You can include that bottom bit, something like this, a little bit of a broader triangle that we had formed with the Bitcoin. So as we come in and get range expansion, I think the first line that stands out to me on the 120-minute chart would be this old spike high that we left. Coming in around about to 110 to 65. I'll just mark it with the little dashed line. So if we forge, like super far in the Bitcoin, we'll be keeping an eye on that. Since we marked up coming into the 8 a.m. reading, it would be very similar to having a small gap for the Bitcoin on its opening. So just bearing that in mind, right? I include that with the currencies there, digital currency after the EC, right? Currency and digital currency respectively. And then that brings us over to our next group. Again, we've been following this star and gold each day, same type of constructs. The 120-minute time frame, the big blue lines there, the boom, boom, boom. Right? The bottom of the structure at 3304.4. How important it was when we came in and initially breached. Right? We took out the point of interest, and what did we see? Right? We proceeded to trade lower. Right? This is kind of getting similar to the euro currency to a degree, right? Accompanied by lower highs and lower lows. We've already gotten the test out of the way for the gold. We've made a lower low overnight. So coming into the session today, what I like to point out, and I can't express how similar this is now to the bonds, which we'll be looking at next. We saw yesterday the 120-minute time frame for the 30 years, the bonds. We talked quite a bit about the divergence, right? The buy divergence that had formed. Right? We resolved it. Remember, right into the end of the day, into the close, right? We touched the moving average, and now we have a similar structure in the gold today. Right, we have a little tapering in momentum, a little loss of momentum or divergence that's starting to form on the 120-minute chart for the GC. The moving average coming in at 3312.8 for our purposes in the case of the gold. And very similar to what we had with the bonds yesterday, we have some supportive regions down below. This here, bold them up so we can kind of see. We have some supportive regions down below that can serve us. The 3285.6, which we didn't quite reach down towards. The hourly moving average coming in at 3312, so it's a little bit of a ways up there. But just to refresh ourselves, it doesn't have to occur right away, and it doesn't change the integrity of the trend, right? We're still, in this nice downswing. Again, I think this bond chart yesterday gets the gold star, if we would, right? The same type of divergence that we worked off here, right? The lower low in the price, the higher low in the oscillator. We looked at that in the morning yesterday, right? We came up off the low, reverted to the mean, but guess what? We still have lower highs and lower lows still persisting with the 30s. So it's still problemsome, but just kind of highlighting the similarity in structure that we now kind of have working with the GC. So that'd be what I'd be keeping an eye on if we continue to test down or take out the overnight low at all. 3285.3 is going to be our little lower threshold, little point of interest that comes in deeper in the case of the gold. But for now, that's what I'd be latching on to there. Let's change this to a different color so we don't get confused with the original constructs of why this zone was so important on taking out the 3304.4. Alright, and then we have the CL into the mix. The crude, you know, it's chipping away at things. It's not the most inspiring thing on the board. I love how yesterday we pretty much closed at the previous day's high for the crude. 68.32. It's a visible data point. We saw them trade around it early in the morning and then in the latter stages of the day. So we had gotten the follow through, right? We looked above the prior day's high, consolidated around both sides of it, and now into the overnight session with the crew, we've been forming ourselves an inside range bar. Right? So not too much changing, right? We came up, did the double test. Since we traded around it so much, I'd suppose 68.32 could still be viewed as a point of interest coming into the session today. Not one that I'd be like overreading into. We could say, you know, this 120-minute chart has somewhat of the three pushes structure. So I'd be keeping open mind. We could, you know, consolidate slightly if we drop below 68.32. We have a case for making it closer towards the 68.08, which would be the 120-minute moving average for the crude. At the moment, not jumping out at me. We have the EIA data later on in the day, so we'll see what that brings to the table. But for now, it remains pretty muted, and no gap areas to take into consideration either. And then that brings us lastly here to the bonds, the 30s. Right? Again, you don't need to beat the drum here at all. Lower threshold, lower zones that we traded into, the 112.29 down to the 112.18. Reversion to the mean by divergence gets the objective. And we come in and tag the moving average. We've come in and tried to form ourselves somewhat of a higher low, starting to rotate slightly. We do have the ability to form an inside range bar. If we proceed to hold the previous day's low, we could very well try and form 3-bar breakout mode for it today. Still, what I'm defaulting to, really not getting too overly enthused with these bonds, mainly because, again, we remain in the structure of lower highs and lower lows, which is the primary issue at work here with the bonds, just like how we have with the euro currency, right? So until we start to change the structure, if we were to come in here and, you know, put in a higher high or something along those lines, that could be something that catches our attention, but for now that still remains to be seen, even including the work from what we put in with this overnight session. I'd be watching the 113.18 for today. If we come in and take out 113.18, you have a little bit of an upper zone. Otherwise, still would be bearing in mind that the bonds have some work cut out for themselves. And we saw the same divergence, by the way, in the 10s as well. The same rhythm, the same job on reverting to the mean, just a tad of residual weakness in the 10s relative to the 30s. All right, we'll scale this back down here just a notch.